Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com and finbingo.com. And let us look at the global cues. US market closed green. Dow closed in green for 2 consecutive days. So that's something really very good. But however, Nasdaq was down. The Nasdaq was down because of mainly because of Netflix. I always say, for the last few weeks, Nasdaq one day up, it has to go down the next day. So that tradition was followed yesterday, mainly because of Netflix. And some interesting fact about Netflix, the coronavirus came, the pandemic, the people started watching more movies, and then Netflix prices shot up. And now, I think now everybody's back to work, and I think the less number of people are watching. I don't know. So the Netflix says they lost 2 lakh subscribers. And 2 lakh subscribers, assuming that everybody paying $10, so they'll be losing only $20 lakh. That's about $2 million. But their market cap was fallen by $200 billion. So, so that is how stock markets work. Netflix market cap now is exactly same as Netflix market cap before the pandemic. So that means, okay, though Netflix is down by 35% yesterday, one thing we all have to be happy, now there is no more pandemic. Of course, the people are getting scared and this and that, but they are not as serious. Now the pandemic has, like, this coronavirus has become something like a flu, cold and other things, so nothing very serious. So we are not very happy about the Netflix saga. And remember, people like me also like a Netflix. Because of coronavirus, people had a lot of time. They used to watch my channel, more views and more money for me. Now my viewership has gone down by about 30 to 40%, and we also get less money. Yeah, so that is a part and parcel of the life. But though we are getting less money, we are happy that there is no more pandemic. So after the market, some other results have come, particularly Tesla came out with a good results. So because of that, US futures are higher now, and SGX Nifty indicating about 80-point gap up. That's a very, very decent gap up considering the madness in selling by FIAs. Both Infosys and HDFC Bank ADRs are higher, and particularly HDFC Bank ADR is up nearly 2.5%. So because HDFC Bank has a high weightage in Bank Nifty, the Bank Nifty may outperform. Remember, yesterday the Bank Nifty underperformed. But however, as I always say, HDFC Bank ADR and HDFC Bank, there is no 1:1 relation. Because FIAs cannot buy HDFC Bank shares in India, so they always pay a higher premium to buy from the ADR market. So globally also, the markets seems to be stabilizing. For the first time, 2 consecutive days, Dow was plus, and the third day now, the futures is also higher. So 3 days of green is something really very good. It shows that the markets are at least stabilizing, if not going higher. There were some signs of slight bullishness in our market also yesterday, as per some technical analysis which I follow. Another important thing, just 2 days before, from last 45 minutes, mad selling. I think now Nifty is recovering almost the entire loss. I think that day Nifty was trading between 17,200 and 17,300. It was going up, down, and then came and broke 17,200 and fell another 350 points, taking the total fall from intraday high to 450 points. But now again, the markets are back to 17,200 to 17,300. So that is something really very good. And looking at the open interest, yesterday I told you 17,200 call option has the highest open interest and 17,000 put option has the highest open interest. Usually the people sell both when they expect the range bound market, considering the total premium of about 60 rupees. at the time of closing, but anybody would have done about 10-15 minutes before, they would have got a slightly higher premium. So they would have got something about 60 to 70 rupees premium. So these people will come into trouble if Nifty spot crosses 17,260 or 17,270. So therefore, we can expect the resistance somewhere there. And if there is any short covering towards the end of the day, the story may be different. But otherwise, we can say the resistance will be around 17,280. And that's because these people, can also do some kind of adjustments, They will book the profit in 17,000 put and then they may sell 17,100 put. Thereby, they may be getting about 10-20 rupees extra. So up to 17,280, so these people must be safe. So therefore, logically, we can think, so the resistance should be around 17,280 today. Reliance is moving towards all-time high, and I think now the talk of the town, Singapore GRM. I think I already explained what is GRM, gross refining margin. So that is the amount of profit that make refining margin per barrel of crude oil processing. So Reliance is Singapore GRM is trading around $17 to $18, which means that Reliance is likely to post eye-popping GRM of about $20. So anyway, in another 1 or 2 weeks, the results will be out, but the speculation will be on the higher side. So out of the 7 Heritage stocks, 5 stocks, Reliance is doing very well because of Singapore GRM, and HDFC and HDFC Bank, I think it cannot fall some more. And HDFC in the last 10 trading session has fallen from 2,950 to 2,150. That's almost 30-40% fall. Just imagine a company, the bluest of blue chip stock like HDFC and HDFC Bank falling 20%, 30%, 40% in just 8-10 trading sessions. And then TCS and Infosys, IT twins. And after falling, they are taking some kind of a support and they are recovering. So IT twins, HDFC twins and Reliance, all 5 stocks are doing well. So that means market has to do well. And the remaining 2 index heavyweights, Kotak Bank and ICICI Bank. ICICI Bank came under slight profit booking ahead of the results. But if they declare good results on Saturday, because the markets were not happy with the HDFC Bank result. If ICICI Bank declares a good result, so the next week, ICICI Bank and Kotak Bank will also join the party. So that is when the market can move higher towards 17,400 to 17,500. But again, this April series, we started somewhere between 17.4 and 17.5. If we close between 17.4 and 17.5, that means one whole month, the market is just flat, not gone anywhere. So our only worry now is FII selling. In the last 3 trading sessions, they have sold 15,000 crores. And this is, a big figure by any standard. So, however, one good thing is that yesterday they sold less compared to the previous 2 days. So, hopefully they continue to sell less. So, they may reduce the pace of selling. So, if I am looking at some data points, some good things, one thing is that US VIX is inching towards 20. That is, it is slightly above 20, and we will be more comfortable if US VIX comes below 20, which may happen today or tomorrow if everything goes well. And our VIX is firmly below 20, so nothing to worry much. So another good thing I can see, normally when the selling comes, mid cap and small cap will be selling off more than the large cap. But this time, mid caps and small caps are holding actually. Even the day when Nifty fell so much, the mid cap and small cap did not fall. So these are all the positive signals, and to see, like we can come to a conclusion that, you know, the short term, the pain may be over, and markets, if not, it may not go rally higher, but at least the fall from here is very, very limited. And I think 17,000 will be a good support once again. So once again, you know, for the rest of the series, Nifty may go to 17,000 to 17,500, 600 range. So again, it all depends upon how much madness on the higher side with Reliance, and how much madness or how much short covering is going to happen in HDFC Twins. The markets are dynamic, making violent moves. So that's it now. That's it for now. Hope you enjoyed watching the video. Thank you for watching.